Okay, good afternoon all. Welcome to the Cal Poly SVP Tax Reporting 1099 webinar / in-person event we're doing today. Let's talk a little bit about what we've done so far, an introduction to the program and what's got us to this point, and then we'll take some time to go through what are the processes that we need to get done. So at this point in time, I've done a beginner's class and intermediate, and this starts to the more advanced section of the QuickBooks reporting that we try to complete every year. Just as a note, this class will be repeated in the beginning of the third quarter next year as well. Everything that I go over today, I will be sending out in a PDF format or a link to the references, so you don't need to worry about taking notes. This is also being recorded, so you'll also be able to take some time to go back and review everything that takes place. I do go over quite a bit of material here today. We don't need to have every question answered today, because what starts to happen is one question leads to another, and then a whole process takes place. And then we spend a lot of time talking around one topic. What I really like to do is identify the key areas that you need to be looking at, take some time to review those, identify those, and then if we need to set up a follow-up session, I'm more than willing to sit down with everyone. Remember, one of the reasons we do this class now is to prepare for what's taking place. And the fact that you are already thinking about this right now tells me that you're well positioned moving forward. Now, what does that mean? Well, December 31st is a really important date, as we all know, but it is not the begin and end all when it comes to your expenses, especially when it relates to the things that we will be talking about today, and that's vendors in particular. We're not talking payroll or anything related to that from a tax perspective in this instance. And that's why I say December 31st is an important day, but it's not the most important day. And here's why. What's going to happen after December 31st? You're going to get bills. And when are they going to be for? They're going to be for 2022. So I do want everyone to keep in mind, as important as December 31st is to drawing a line and cutting it off, it is more important from your business perspective to ensure that you are capturing those expenses in the relevant year. Keep that in mind as we proceed through this as well. So again, we're strictly talking about the vendor side of things and the requirements associated with that for today. Okay, moving forward, let's talk about what's got us to this point in QuickBooks, what we've done so I can ensure that we're in the right position to be able to go ahead and both do the tax reporting that we need to for year-end close, and I will be going through a checklist of what you will need to do within QuickBooks to ensure that you're closing it out correctly, number one, and I will send that out at the end of this. We're going to go through it together to make sure that everyone feels comfortable with what those requirements are, the advantage of having a small class. Last but not least, we're going to go through every single type of 1099, because the key part of the 1099 when it comes to QuickBooks is the good news is it does them for you. But what it can't tell you is the different types of 1099 and how they relate to your business. And the only way you can ascertain that is to have an understanding of how each 1099 relates to your business. Now, the good news is there's only 6 different types. In most cases, only 3 types that relate to your business, and I'm not going to go too far down that rabbit hole until we get to that point and start talking about it. With that said, what have we done in QuickBooks to this point to ensure that we have everything set up correctly? Well, we started at the very beginning, right? We established our business. We've got a tax ID number. We've got our vendors set up in QuickBooks. We've got our customers set up in QuickBooks. Most importantly, when we talk about our vendors, we have their W-9s on file, okay? Because the key aspect of generating that 1099 is going to be having that W-9 on file. You will not be able to generate that without having that W-9 on file. Most importantly, understand the process that you go through to generate the 1099 and what it is used for, right? From a perspective, from a tax liability perspective, you are passing off the reporting aspect of that tax liability. If you weren't, you would be accruing it internally yourself and having to report it either monthly, quarterly, or annually. Keep that in mind as we proceed through this, because it can relate to you differently.
I just had that again if you have 2 virtual.
We have
2 virtual.
Oh, fantastic. Okay, so we started off with a general understanding of what we want to achieve today, and we're talking about what we've done in QuickBooks to get us to the point. We have established the customers, and I'm just touching on this again. for anyone that's just joined. We've got our vendors set up in the system with their W-9s associated with them. We've got all our customers set up in the system correctly. Now, one of the most important aspects that we continuously talk about when we have my class, and I go right back from the very first beginner's class through this class and every class that I do, is to ensure that we are reconciling our books monthly. Everything we go through today is going to be with the aspect that things have been done correctly. You're tying out to your bank account, you're reconciling your books on a monthly basis. You are then closing out that period, right? And ensuring that everything ties back. Why do I bring this up? Because that is not always taking place. And guess what? You have time right now to ensure that it does. So take the time to ensure that you are doing this before you close the year out. Because as I've stated before in past classes, QuickBooks is very much an aspect of garbage in, garbage out when it comes to the reporting aspect. If you are not validating the information in QuickBooks before we start doing something as important as tax payments and 1099 generations, then guess what? You're going to have your vendors calling you up going, excuse me, what's going on here? That's not how much you guys paid me for this invoice. That's not how much. And so this starts to create issues for your business as well, okay? And so ensuring that you're doing these things on a monthly basis, they're closed out correctly, and you're tying your balances out. Everything else that we're talking about will get us to the point today with the vendor where we're simply asking the system to generate that 1099 form relating to their business and what that liability is for them.
Does vendor mean contractor?
Yes, same thing. Interchangeable in any way. It's basically any payment that you're sending out to a business that facilitated some kind of work for you or service or materials for that matter. Okay. The key aspect of this is that this is a continuous chain that keeps happening. That vendor is doing the same thing with his customers, contractors, and so on and so forth. So ensuring that yours are correct, that yours are up to date before you do something like this. I can't overstate this. Trust me, the last thing you want to do is send out 30 of these, and 30 of them are wrong. Because guess what you're going to get? You're going to get 30 emails, you're going to get 30 phone calls with some really pissed off vendors out there, right? And that doesn't help you in any way. Take the time to do it right, guys. I mean, if you're going to go through the process of doing this and working like a business, do it right. It affects your reputation. It affects how you're reflected in the local community as well. So do things correctly. Okay. Let's dive in here a little bit and take a closer look at what they actually mean to everybody. So I'm going to start with resources. So before I start anything, when I have questions relating to taxes with QuickBooks, 1099s, anything from that perspective, before I go to a CPA or reach out to someone that's a lot smarter than me, I always utilize the QuickBooks resources. They, in fact, have a whole section geared solely towards managing taxes in QuickBooks. This is such a great resource because not only does it touch on specific areas, so as example, 1099 reporting, but it will basically go through and outline every bit of tax reporting that it takes to do within QuickBooks and walk you through the process. So after today and everything that I'm going to explain to you, if you want to go back and find a resource to walk you through everything I've talked about today, whether it relates to sales tax, payroll tax, you'll find it in this link. And I will include this link when I send it at the end. But a great resource for you guys. And the thing about it is, I bring this up quite often. There's not a question you're going to ask me that someone hasn't already asked before when it relates to this. So I still continuously go back to this and make sure that I'm up to date. The other part I really like, they stay up to date on their IRS notifications. So I make it a point of reference to try to visit at least once a month just to stay up. Can't stay on top of everything, but as it relates to your business, this is a great resource as well. Okay. Let's take a look, and I'm going to bounce around here. and talk a little bit about the different types of 1099s. I'm going to start there only because once you have a clear understanding of the different types of 1099s, you'll kind of figure out very quickly that only certain portions relate to your business, and it makes it a lot more easier to deal with. So 1099 INTs, 1099 miscellaneous, so on and so forth. So I'm not going to do a deep dive into every single level of the different types of 1099s. Just a real level, high level overview. I'm a big Investopedia fan from a resource perspective, just if anybody wants to know. Again, will be provided in the links. So let's go through this real quickly before we dive back into QuickBooks and see what it takes to actually generate these 1099s, right? So the first 1099 we're going to look at is the 1099 INT. Now, this is sent to taxpayers if they earn more than $10 worth of interest in the tax year. This is typically for like brokerage firms, banks, and other investment firms out there. I don't suspect in any way that you guys will be dealing with anything like this. But again, now you know, because you're going to see a list show up within QuickBooks that will ask you what you're doing. 1099 DIVs, pretty simple, right? 1099 dividends typically sent to taxpayers if dividend income was earned through the taxpayer year. Dividends are usually in the form of a cash payment paid to investors by a corporation as a reward for owning their stock or equity in shares. Again, just an understanding, doesn't relate to you at all at this point in time. 1099G sent to those who receive money from federal or state or local government. For example, taxpayers who received a local tax refund or unemployment would likely receive this. Now, this does relate to some of the businesses that I have worked with over the last year or so in regards to COVID funding that they received to support their businesses. This is the area, I don't believe it would relate to any of you guys, but this is the kind of things that it would come into play when we're talking about this. 1099B is sent to taxpayers listing the various transactions from brokers, such as the sale of stock, commodities, and other securities. Also, some types of bartering transactions are executed through a barter exchange, which would be listed. Basically, a trade per se of valued goods. I don't think I've ever seen one, to be quite honest with you. 1099S, this is issued for real estate transaction if they close the sale or exchange during the tax year. Some examples include real estate transactions, realizing gains or proceeds from the sale of land, commercial building, residential properties such as homes or condominiums. Again, does not relate to you at all. The good part is the next one most certainly does. 1099 miscellaneous. This is predominantly going to be the majority of the ones that you will be dealing with. Unless for some reason you specifically have your vendors as contractors set up differently. 1099 miscellaneous is typically issued for income that falls outside the other forms. For example, some types of non-employment incomes are reported as 1099 miscellaneous, such as money received from prizes and or awards. All of your contractors, unless stated differently, will be miscellaneous. And then lastly, but not leastly, 1099 NECs. The IRS has made changes to its reporting requirements for non-employee compensation. Beginning in 2020 tax year, the business must report some type of non-employee compensation on Form 1099-C or Form 1099 miscellaneous was used in the past. So an example of that is if I had a second or third job. I came in at night and worked as the cleaner here as well and was being paid by the corporation for that as well. They would need to declare that as well, right? Kind of uncommon these days. You don't see it that often. Contractors, sometimes you do see it with them. I don't see how it would relate to what you do right now, unless you had a specific agreement with a long-term agreement with someone in play, like a 5-year contract agreement with someone, and you're paying them a fixed amount every month for a service. That's where this could start coming to play. That's it, right? The good news is you guys know what 1099s are, right? You actually know now how they relate to your business, right? And you know now why we're generating them for your vendors. So we're good, right? No, unfortunately not. Is the case when it comes to this at the best of times. Why not? Well, because the system, again, is only good at doing one thing, producing the information that we provided, okay? And that's why I keep harping on making sure that before you run this process, what do you need to do, guys? And I'm going to be deadly serious here. You need to go through all those vendors / contractors and make sure that you have what? Every invoice in the system, right? You're going to go through this process again, because if you don't, you're going to have to go back, amend that 1099, go back and reproduce this whole process for that one vendor / contractor. So take the time. Most of the vendors that you deal with out there should be sending you a monthly statement if you have outstanding invoices, right? And if you don't, you should be asking for your vendors, because guess what that is? It's a great reminder to you to stay on top of these things, right? And again, hopefully at this point in time, you don't have a huge amount, but take the time to make sure that you've got all your vendors' invoices in the system, coded correctly, categorized correctly before you start this process. Because the other part about this is that pack of 1099s, you're gonna have to go order a bunch more. All right, so take the time to make sure that everything in there, I keep harping on it, but I don't want you guys to have to go through this process twice. Good? Guys, I got to make some questions at me here. Otherwise, it's going to make it really tough. Let's talk about the, none of you are falling below that $10 worth of, the $600 worth of service benchmark line, right? None of your vendors that you've dealt with throughout the year, you provide less than that $600 benchmark worth of either products or service. And I asked the question because that is that cutoff. Now, rule of thumb, personally, I would generate a 1099 for anyone that you have a W-9 in as a vendor. I don't care about the dollar amount. It's done. Because then the question is not on you anymore. The onus is on them, which it is from the first place. It's just that threshold. It's just what that threshold is. So as a premise, I would always 1099 everyone. So just to keep in mind. Okay. Let's do the next step of the process, which is the process of actually generating the 1099s in QuickBooks. It is a 3-step process. It is super simple if we've done everything to this point in time, right? Which includes ordering the 1099 forms, which can be done online, or you can go into Staples and pick them up. So here is my little company. I am RMM Engineering. I've kind of used this since the day I've been here. I've a number of different iterations that I've run through the system, presenting it to you guys. But the cool part about this that I really want to show you is the simple act of generating a 1099. You're going to be going under your vendors. In my case, I'm going to be going under Get Paid. So I'm just do a vendor search to make it easy. Once you're in your vendor section, we're all familiar with what it looks like. We have our vendor set up in here. We're simply going to click on the top right hand corner, prepare 1099s. Now, the system is going to prompt you and ask you a few questions. The good news is we have done everything that we talked about to this point. All of them have already been answered, right? Do you note the deadline day? This is the date by which you need to have them printed and mailed.
Would a driver, in our case, be
You're a little different, right? Are we below the 600 with you? Are we going to?
For everyone for 2022, yes. We're going into the year, there's going to be whatever.
I know there is, but because you're so unique in that area we've talked about, answer your question is yes.
And so we have to get the addresses of each of those people?
You don't have to get any, you just have to get the W-9 from them. That has everything you need. Just like you have to provide
it. Give them the W-9 when they fill it out.
And they provide it back to you, and that has everything on there that you need to do this.
What if they don't fill it out?
Then you can't provide it to them. You don't pay them. You just like if you can work for Cal Poly, if you didn't give me that W-9 when you went to HR, you wouldn't be working right now, man.
So pretty much this W-9 should be created the moment that they start signing up.
Yes, it should be part of your intake process so that you have it on file. Because otherwise, where does that liability fall? Yeah. Right.
So I think QuickBooks prints and mails 1099s for us.
Correct.
So what do I need to bring?
You don't have to do anything, is what I'm saying. I'm just walking you through. So I still actually, folks will print them off and throw them in the mail. You do not need to. If you've got the email address listed within the vendor, the system is going to do it all for you. It's still going to walk you through these steps that I'm taking you through right now, except at the end, yours will be an email. Mine will be a print. Yours will be a printed email, whatever that is. And it'll reference it for you automatically to show you which vendors / contractors don't have email addresses and which of them have mailing addresses.
Sure.
Okay, so as we walk through this process, I'm just going to talk about a high-level overview of what QuickBooks is going to be asking me. It's going to look at your company, first of all, and validate the information that you have set up right now. Please remember, this information is going to the IRS. Make sure it is correct. Make sure you have the correct EIN number. Make sure you have your registered business address here, not your mailing address, which can be different. This creates confusion and can lead to issues again. These things seem small, but they can lead to a whole lot more work later on if they are not done correctly. So once you've broken out your portion of it from identifying the business side of things, the next part is to look at the category of payments to the contractors. So this is what we talked about a little earlier on, where how does it relate the different types that we talked about of tax reporting relating to 1099s. Now, in most cases, when they actually complete the 1099 for you or the supporting documentation, they might state to you what type of 1099s reporting they are. Now, there's a box actually on the W-9 where they can click for 1099 reporting. Some of them will state what it is, 1099 MIS. If you've entered that in the vendor when you set this up, the system is going to know the difference between the two for you, okay? Most people don't, because by default, they normally state miscellaneous. The only exception to that is what I talked about with you, which is the NEC, which relates more to contract work or how that's structured, right? And unless they state differently to you and specify it, I would always do miscellaneous, okay? It's not your responsibility to determine what their 1099 is. Theirs to let you know. Make it simple for yourself. Let's go. I'm just going to use miscellaneous. Okay, so any other type of payments now, specifically, we've already actually talked about this in the different types of 1099s that we're talking about, but the system makes it easier for you. And it actually poses the questions that we talked about in those 6 different types. But it's actually going to ask you, okay, did you make medical payments? Did you get royalties, right? And it's going to take that information and map it out to the different types of 1099s. Now, you already know based on what we looked at and talked about, right? So understand what this means to you. Small areas where this can relate and where it is specific to you guys is things like dealing with people like attorneys, dealing with things like copyright, right? Where this can come into play. So again, just keep that in mind. If you have a good CPA, he's already going to be asking you these questions in regards to this, but do keep that in mind as you proceed through here. I can't think, unless you are working on a federal project, a VA project, there's no instance where I could see federal tax withheld. This can get a little complicated. It can go down to the level of having a federal notice withheld from someone, or someone's pay is actually stipend away for a reason that we don't know. These kinds of, that's where you're going to see this kind of tax withhold, or something completely different. Someone could have a lawsuit against them. Someone could have, it's very, very rare, and or other, right? They could clearly state to you they have a foreign national. There's a myriad. You're not going to want to talk to me. You're going to want to talk to someone who really knows what they're talking about as this relates to your business. So Again, not a tax guy, just advising you on the best way to go about it. If you ever encounter this when it comes to federal taxes, seek a CPA out and get their advice would be my best recommendation to you guys at this point in time. And honestly, unless you're dealing with foreign nationals or what I just stated, you're not going to be dealing with this very much. That's it, right? That's the complexities of dealing with it. All it's going to do now is take a look at all the contractors that we reference out there and do exactly what I talked about right at the beginning. It's going to point out to you all the ones that it has that tax ID number and email address on file, because those aren't a problem. But the ones that we don't are. And this is where it helps you from the homework perspective that I talked about, because you're going to go through this whole process. But unless, as in my case, I don't have Philip Hall's tax ID on file, got his email address. So obviously I need to go out and get that information before I can complete this task. Now the system is going to scan through and identify all of this for you and let you know exactly what's missing and what needs to be updated, which is the next part. It's just simply a matter of then going to the very end and click on finishing preparing them, at which point you have the ability to either email them and or print the information directly out from here. And that is what it takes to generate a 1099 in QuickBooks. Not hard, not complicated if the 3 steps that we talked about before have been done correctly. Trust me when I tell you, if you haven't done those first steps, you're dealing with a couple of days worth of work here at a minimum to get it tidied up. That's why we're talking about it now, right? I don't expect it from you, but trust me, there are people out there that do leave this and then worry about it. Now's the time to talk about it, guys. Now's the time to fix it. If we're good here and there are no questions, I am going to start talking about year-end close and what you should be looking at. We touched on one of those areas here. I am going to walk through that checklist with you guys again, just to highlight it. But any questions relating to QuickBooks Online 1099s, QuickBooks Desktop's process is exactly the same.
My pleasure. So I think you mentioned at the beginning something like attaching the invoices to validate their work.
Yeah.
Right in here.
Attaching the invoices inside the vendor staff contractor that they've sent you completing the payment.
Okay. Because I don't think I've ever done that.
Okay. Okay, so let's talk about that really quickly.
Like we filed last year, and I don't remember having to attach their invoices or anything.
So let me explain what I mean by attach it. So inside QuickBooks, you have your vendors slash contractors, right? They send you an invoice, let's say, that you pay through the bank, right? And then you match up those two and they wash each other out, right? However you get this transaction right here, right, into the system, whether it's a physical invoice or whether you just wait for the payment to come through the bank, right, you have to ensure that all of this is inside 2022. Okay, you with me so far?
Yeah.
Now, 1/15 of 2023, what comes in your email in the morning, an invoice, bill, payment, whatever, that relates to 2022. Right? It's your inclination to just let it reside. We're in 2023, we're good to go. No, that is incorrect. It needs to be clear. That's why that 27th date is so important. Because before the 27th of January, you got to get all of this done into here so that when you run it, trust me, the vendor's going to know he sent you that invoice. That's what I'm talking about.
I see. Okay.
And sorry, and most people don't do the invoices. Yeah, you know. Sorry, old school. I'm so used to physically, I think you guys these days take the payment, categorize it, and that's totally fine. It's more about capturing the expense in the year before we generate the 1099s on this date. Otherwise, they're going to come back to you. I sent you this invoice last year. It's not reflected in here. Make sense?
So the service was performed December 31st and earlier, but you get an invoice after that. You still have to categorize it for 2022.
100% correct.
Okay.
And one of the biggest failings when generating 1099s is what you just said. And then what happens is the vendor goes, this is not correct. It doesn't tie out to what I'm showing. He comes back to you and you go, well, no. And he's like, well, I sent it to you here.
Good.
Good?
Great.
Okay. Some people we got online still.
Two. No
Okay.
questions.
No more questions on 1099s?
So we got a new attorney this year,
Okay.
and we've just been paying him by check. I have it all categorized in here, but I don't necessarily have him in my vendor list as a contractor, paying him with direct deposit or anything like that.
You need to.
Would you suggest just setting up a W-9, sending it to him over email, and then he'll fill it out on his end?
Mm-hmm.
Okay.
Exactly what you do, and then just create it for him, and then just code those. I mean, as long as you've got the categories correct, right, you're fine because you're tracking those expenses. But now you can associate with him as a contractor / vendor. That way, when you generate it, you'll be absolutely fine.
Okay.
So any person or business that we pay, like for example, ASAP for graphics, get marketing materials, we have to get their EIN.
You have to get the W-9 on file, yes, which will be the EIN. Still the $600 threshold, but again, per my last statement, up to you. Right? Your business, your choice. I'm just here to provide you all the information to make that choice. Good? Yeah? Awesome. Just throwing, I know what's going to happen, right? We always talk about this. You guys are going to go away and you're going to go, but you said, and then come back. I'm fine with that. I hope you do that because it means that you're listening, you're engaged, and then you're starting to think about how this relates to your business. So again, my door is always open. Email, Slack, whatever works. But I really just want to get the wheels turning in your head about how this relates to your business. The good news for most everyone in here is we've been going through this throughout the year. If you've even been following half of what I've been teaching you guys, you're in a really good position. Okay, let's look at some out here. Again, everything I'm going to show you and talk about right now, I will provide to you in an email. Long story short, this is basically a checklist of what you need to do and be looking at in QuickBooks before the end of the year. Most, if not all, has probably been done. Because if you tie them to your monthly procedures, like we've talked about in the past, a lot of this will be done already. You understand that you are going to want to start thinking about these reporting aspects from a monthly business. As your business grows, right, your requirements from a reporting accelerate. So right now, most people on either a quarterly or an annual basis, as your business grows, you start to pay more people, right? That frequency will narrow. So making sure that you have these processes in place before you get there certainly helps you and your business as you grow. The other key part about it is most of these processes are scalable. Right? If we're using things like QuickBooks Payroll, into tax reporting, once you get to that point, all of this is very scalable within QuickBooks if you have the processes in place. Again, not a super complicated checklist that I'm going to go through, but you make sure that you're taking the time to address each individual item. So, high level overview, not going to dig down tree because I know majority of you are doing this already. So things as simple as reviewing the transactions hitting the bank, showing up in your QuickBooks each morning and ensuring that you're validating and tying those out. As crazy as it sounds, I have people that come in here and sit here and go, I cannot get the bank to tie out. I go into their banking transaction. There was a lady in here yesterday, 794 transactions sitting in her banking side in QuickBooks, but she couldn't figure out why it wouldn't balance back to QuickBooks. I'm like, you haven't associated these with anything in QuickBooks. QuickBooks doesn't know. So taking the time to make sure that they are tied up, that they are balanced, which also means she wasn't reconciling her books. right? So we start to go down this pathway where good business practices and the way we go about operating our business on a weekly, on a monthly, on a quarterly, on an annual basis is about the processes that we put in play. So make sure you're tagging the transactions and taking the time to do it. Double check your tax profile, validating your EIN number and that you've got all the information. We talked about this right at the beginning. We talked about it. Make sure you've got your right mailing address. I get it. You have a PO box sometimes, right? That all your mail to. That's not who you registered the business under, right? Because you're not allowed to use a PO box. Make sure you have the correct mailing address on file, okay? If you're making claims for mileage, right? Make sure that you're documenting and updating it correctly. If you have reimbursables associated with that, ensure that you are tracking it and using the correct rate stated by California. Seems small. These things add up, okay? Little things. Recording your business assets, not a huge deal for you guys right now, but as you move forward, right, thinking about the asset, what that line is, $500 and up is an asset to the business. No, it's not. $3,000 and up is an asset to a business. I'm going to amortize it over 3 or 4 years. That's your decision to make. Start thinking about that process because you're at year end, which is when you start having to make the decisions about these things. Not as relevant to some of the business in this room now, but they certainly will be possibly next year at this time. Again, the wheel's turning. This checklist is coming to you. So keep it on hand. When we get to this point next year, we're looking at this again so we can address these items. Missing transactions. Well, guess what? I know everyone in here is reconciling their books monthly and tying them out to the bank, which is our one source of truth. So guess what you guys don't have? Missing transactions. Now, I say that and you smile and you joke. It's a huge achievement, guys, to go through each month, tie your books out, and make sure you're validated when your business is your size. Because trust me, this is the biggest part of what I normally have to deal with when it comes to closing out businesses a year in, is missing transactions, okay? And for whatever reason, the younger the business, their ability to capture, right, and record expenses is really tough. You guys know, and you guys know how much I harbored on capturing those expenses, how important it is to your business. That's what we're talking about here. So I know from my side of the world, I have hammered this point in so hard, so many times for you guys, because I don't need you paying any more than you need to be, and nor do you, right? That's what this comes down to. That's why I talk about the bank. That's why I hammer home reconciling your books every month. Take the time. I know it's a pain in the butt, but do it. This is easy work if you've done these things. And you can literally see as I walk through this checklist, these are all things that we talked about in the previous classes that I've gone over multiple times before. Because again, if you've done all of this, it will lead you to this point with the guide that you guys have from my previous ones, that this is actually not that hard, right? And hopefully right now you're feeling a bit more comfortable about this process because I get it, it's intimidating. Your CPA comes, year end's coming up, here's what and you go, oh, okay, right? No, you guys have done your part. We're in a good position here. Just making sure that we've dotted the I's, crossing the T's, and got all our ducks in a line when we close out the year, right? And again, it's not the end date of the world because we know things are going to come in afterwards. So keep that in mind. Stop me anytime. Okay. So basically, this is going to walk you through the process of 1099s. It is not January 31st, as I stated. It is actually January 27th. Don't even need to talk about this right now. But you guys do know that if you were talking payroll taxes, right, if you're using the QuickBooks Payroll system, it is not something you need to worry about. If you're doing payroll yourself, this is where we would start to have that other conversation at this point. I don't discuss payroll taxes in a group setting like this because it is very, very specific to your business, as you both know very well, right? Especially dealing with what we've gone through with you. So again, overview, I'm not a tech specialist. Make sure you're asking the right people the right questions to answer for your business. Run year-end reports. So the system actually has year-end reports that can consolidate for you, just like you can request an annual statement from your bank account. Do the same things inside QuickBooks from an annual reporting basis that will consolidate everything for you. Take the time to do it. Take the time to look and understand the expenses and what has taken place with your business. You are the master of your own business, and having the knowledge base about what's taking place, where the money is going, how it's been spent is important, guys. Okay. As it relates to reporting aspects, this is where your CPA might ask you to run some annual reports. You could just search them out. You can customize them to you need if you want a specific period of time. If you need help, let me know. But you can basically build out, go into the annual report, generate a general, and then just customize it to whatever they may need. That's the nice part. And then save that template and it will be there for you moving forward. So something nice that's super, I'm a big fan of the reporting. We've talked about this in the past. There's no report in there that hasn't been generated by somebody else that you can take and modify to what your needs are. Correspondingly, they have great templates that you could start with. Just need to tell it where to look. From AR reporting to AP reporting to tax reporting, accrual reporting, and everything else you can imagine. I'm through this. So just touch on this briefly. I've already mentioned it. QuickBooks does have the tax reporting module on it. I do recommend that once your business gets to the point where they start having things like payroll and dealing with foreign trades and things like that, that you start to consider that. Businesses that have kind of come through here like NeoCharge and Flume, they've gone on to QuickBooks Payroll, handled it for them, no problem. It's a great way to keep the cost down minimum. It's not a huge expense to go out and then have to deal with another payroll company. And it integrates with what you're doing, right? That's the nice aspect of it. Your employees can have it on their phone, they can log in. It also makes the tax reporting a lot easier when it's based on that manner, right? None of this paper in, paper out kind of process that takes place a lot of time. The other part that's important to remember is that also that when QuickBooks takes on your payroll liability, they become responsible for it as well. So if the IRS ever come back to you and question you, TurboTax and Intuit will actually represent you based on that information in hand. There's the peace of mind that goes along with that, guys, just so you know, from not having to worry about the IRS coming back. When you do payroll and you do your calculations, your responsibility, you don't do it correctly, ignorance is not an excuse. So if you're not an expert in the area, make sure that you're having someone who knows what they're doing, do it correctly. Okay, this would be another example of that. Okay, last but not leastly.
Real quick question on that.
Sure.
So, how many employees do you suggest switching to QuickBooks Payroll? Because for us, I mean, it's like crazy easy for me to do it.
How many employees do you have?
Just two, and then contractors.
Oh yeah. So yeah, if they're contractors, I wouldn't. So when I talk payroll, I mean payroll. I don't. Yeah. So I'm talking about having to file for state taxes, federal taxes, unemployment, COI, all those things that you are then responsible for. You have to go down to the bank. You have to do the deposit every 2 weeks when you. That's what I'm talking about. When you're dealing with a contractor, it's a completely different relationship. But when you hire an office assistant, she's making $15 an hour, that's when we start to have that conversation. But probably not on one, probably not on two, probably not on three. But with NeoCharge as an example, by the time they got to 4, it's like, okay, we need a little help, right? And so I think it's $12 a check.
Gotcha. To
do it through them, which integrates with this super cheap, right? Direct deposit, all done for you automatically, and then you get all the reporting. So really in your mind, I think it's still 12. Look at it, you can equate what $12 means to you to have them do it.
Well, especially a lot of the remote work and state-to-state employees.
My point.
Deal with other states' taxes.
And you don't have to. See, as long as they've completed the W-9 correctly and it's on file, QuickBooks handles all of it. Oh, it does. And you'll have to validate that because it's been a couple of years since I did. But the moral of the story that I'm trying to convey is they provide a great service at a low cost for a company that's growing in your market because they understand that's a great market for them to be in. I mean, they're not a paycheck serving 5,000 customers at a huge business, right? Their niche right now for QuickBooks, just so you know, is they want that 10 to 100. And they really are focused on streamlining QuickBooks on the payroll side to fit that niche because they know that's where majority of the growth market is. Make sense?
And that 100 plus would be more of an EDP?
Exactly.
Okay.
Yeah, exactly. And these days, there's so many options out there, to be quite honest with you. I mean, there's wineries out there that use these new systems where they have these little tags because they are working multiple venues and it can tell, it actually geo-tracks them to know where they're at, because each one is, it goes state regulations for California. Each one is, they're considered a contractor to each one. So when they go, they have to report taxes for each one, and they use these geolocation. That's all for, the technology is amazing these days. Trust me, when it comes to collecting taxes, the government is very, very good at creating ways to make sure they get their piece of the pie. Okay, so you made me go through an hour and a half's worth of stuff in 50 minutes, guys. Come on, throw some stuff at me here. You're supposed to say, no, damn it, I didn't reconcile my books. No, I haven't been matching my payments up. No, I haven't set up my vendors. No, I don't have my W-9s. Oh.
Sorry, this one.
We have no, like, we just.
You're fine. You are fine. You and me will talk, okay? Because you are so unique. I don't want you freaking out. We're good. You are very good. Yeah, totally devoted. I got you. Yeah. We can figure it out. Yeah. Just who you are and the sector you're in is so very unique to you. And more importantly, the way you're going about it, right? Lining student up with, I want to make sure that we're on the same page. Yeah. But this is not going to be a huge hurdle for you. 1099s will not be an issue for you. No, it won't.
I think the issues could be in getting the W-9s though.
That could. And
it's like,
well, okay, so
this like, oh shit.
Okay, so let's go worst case scenario, right? Okay. Who has the liability?
Without a W-9?
Yeah. Yeah. Okay. What's the California sales tax? The corporate tax rate in California? 11-13%. Okay. So how much did you pay him? $599, Damon. So you're liable for 13% off that $599. Okay. Bad. Don't do it again. Get the W-9. Next one. Oh, you didn't get his W-9? How much did you pay him? $459. 13% of that. Bad boy. Next one. Okay. How many times are we going to do it? And then you'll be good. But do you see what I'm trying to say? It's not going to break your company to have to pay what we're talking about here. What's the issue is we want the process in place to stop it happening again. But what you've done, and majority of these people are going to be fine. Here's because they're going to have their fuel expenses to write off because it works both ways, right? We understand that it works both ways. The person who's doing the driving for you, he's an independent contractor, right? Which means he gets to claim the expenses associated with doing the task, his gas, the wear on his tires, the wear on his car. He's smart. He can itemize that and claim that. Why is that important? He can't do that without what? Giving you a W-9 and getting the 1099. He can't claim those deductions. So it's in his best interest to do that because that $50 he made, he could write 25 of it off. I spent 20 in gas, $2 on my tires. You're allowed to do it. You're complete. So, right, understand that's the relationship on both sides that takes place. If he tries to file and that claim, right, for those deductions without it, they're going to say, no, show me that you did that work. How does he prove it? That's I mean, like why would you pay him for something he didn't provide unless it's fraud? Yeah. Okay, so now we're dealing with fraud. Okay, do it long enough, and guess what happens? You get ignored. You think you're the first person to go, I could pay him and not do it. No, right? I mean, I'm just being honest, guys. Like for like mileage and stuff like that. Like this is where it's not your problem. Yeah, but I kind of feel like our customers are a problem, as in like they're students, like they're not going to, a lot of them are not going to know. It's like, oh, mileage. Like, we have that data to track on how many miles they've traveled. Well, then that's more about you deciding to educate the people that you're working, the intake process, the book you're providing them to know, to teach them what they need to know about these things. You're right, they're not, but then you need to decide what you want to do to educate them on that fact. Invite them to the class. Get them to sign up with the SBDC for their clients, right? Contractors, oh my God. Come on, bring them on, man. They're all small business owners. They're independent contractors. They don't feel like that. I want to reduce probably like I'll reduce them feeling like business as much as possible. Then come up with a one-pager about processes, clearly stating that you're not a tax advisor, but showing the steps that they need to take, i.e., get me a W-9 so that you can claim it as deductions, the benefits to you, and just inform them. of that fact, right? Because a lot of the time, it's simply because they don't know any better. True.
If a lot of these drivers are dependents, wouldn't that trigger their parents' tax returns and issues there?
Oh,
Wouldn't that?
Well, no, to answer your question, no, right? So the dependent side is only for the deduction side of things. Where it will affect them is so where this comes into play, and you both know this, is that you're a student, right? And you're earning income. And as soon as you start making more than $12,000, what happens? Your tax bracket goes whoopity-doo. So if you're working at the hamburger hut down the road, right, and you're making $15 an hour, and that's okay, and then he starts working for you, and he's making $300-400 a month, and all of a sudden, at the end of the year, they've made $19,000, and they're like, and they didn't do the deductions like I said. Single people pay the most amount of taxes in this country, and guess what? The majority of the people that you are going to be dealing with is single individuals. So if they're not doing the things that we're talking about in here, they're going to be paying a whole lot more in taxes, to answer your question. Because the moment you claim yourself as an independent contractor, which is the process that you're utilizing, you are working for yourself and you are a business unto yourself. At least that's the way the IRS looks at you. Yeah, really. That's why that $600 mark is such a big threshold for them, because they perceive, technically speaking, that anything more than that you are operating as a business just individually. And they want their piece of the pie.
So let's do devil's advocate again.
Sure, love devil's advocate.
The majority of drivers are under 600.
Mm-hmm.
Like, why would we even?
You wouldn't
deal with any of the W9 stuff.
You wouldn't. You wouldn't. That's what I'm saying. With you, you're different from what I told her because of what we're talking about here. You wouldn't.
Okay.
You would just make sure that the guys above, you do have their W9s, when you are sending them out, make sure that you're protected, and the ones that are below are clearly documented, and you don't have an issue. Honestly, on her side, it's more work to pull out the ones that fall below that mark than it is just to get them done and send them out. Because their emails are on file. Even people that do below 600 still can sometimes come back and say, can you give me a 1099? Just do it. That's why I was saying, see, it's just easier with yours. It just all goes out so easily. You're a little different, right? In the way that you're, yeah, it's just unique. We're just figuring the process out. It's like anything. Once you do something for the first time, you're kind of finding your way, and the next time you're better at it, and the process will get easier. That's what you're working your way through right now. So, you know, don't be as concerned about it. A lot of what you were talking about is more about educating your employees / contractors that you'll be working with. Mm-hmm. And that's certainly something you can do, right? Or do a better job of than some of the other people out there, let's just say. That's it, boys and girls. I really, unless you guys have more you want to talk about or go over with me, and I'm more than willing to go over whatever you guys want, to be quite honest with you, because I have nothing else planned for the next hour.
I have a really specific question.
Bring it on, I love it.
When we incorporated, unfortunately, we did not file the super important 83B. It was miscommunication with our attorney and whole can of worms. So we basically had to repurchase all of our stock, sell it and repurchase it at 2 cents more than we originally bought it for. Oh. It was a whole thing. And until we switched to another attorney, he caught it. So we went a long time without knowing. Anyway, okay. So it's all buttoned up. So Elijah's after a year, that's the cliff, right? Correct. Okay, so Elijah had hit his cliff. I had not yet. Okay. And so his shares started vesting at that year.
They would.
And so basically what we decided was that he was going to take the tax on that gain.
The capital gains tax.
The capital gains tax. And then we basically like repurchased, and mine was fine. So basically my question is, and I can talk to my CPA about this too.
You have this capital gains.
The capital gains, that's recognized on his personal return.
Correct.
That's not anything we need to do. Okay.
No, but you are going to want to make sure with your CPA how he's documenting it within QuickBooks.
So it
matches.
Okay.
Bingo. Cool. So, and he'll tell you what that number is. Is it the same CPA working with? Then you're good.
Yeah.
Yeah, you're golden. Yeah, they'll tell you. Yeah, that's nothing on you. But that's I was gonna say, and what I was gonna ask you is what was the duration of time between that? Do you know?
We incorporated in September and it wasn't caught until February.
Oh, wow.
But we basically are making, we had an attorney draft up, basically, like not a discussion, but like a point, basically laying out why we only grew in value this much.
Oh, okay. So you were able to justify it then based on that.
Exactly.
Okay.
Yeah, because if we had repurchased at 1 cent, somebody along the way, who knows, acquisition, whatever,
Could come
make the argument.
Yeah, they could.
Created value there, and there's.
Yeah, you did.
So we made it at like 2 cents or 3 cents a share.
So that there was no conflict that was created.
Yeah, so
Gotcha.
that's what we did to kind of like band-aid that. But
No.
file your 83B because it is a nightmare, and yeah.
Yeah, somebody had an issue with the guys on campus.
Big guys.
Yeah.
Why would anyone go through an attorney and not do something like clerky and they handle all of that stuff? I know there's probably a weird little.
So the complexity of the industry that you're in would be the biggest thing I would say to you. And not to say that your industry and your sector is not complicated, but hers is. Yeah. So I would not. Yeah, you. For sure.
Yeah.
Yeah. Right. Just with anything that they're dealing with on the level that they're dealing with, I would go with someone that knows a whole lot more than me. Yeah.
For us, we initially kind of did a we'll say a cheaper attorney, and then we ended up having to pay a more expensive attorney to fix the mistakes. So, to be honest, I would have just like started off with that. It's a lot of money. It's like, you know, like $600 an hour. It seems like a lot at first, but like that's a whole lot more than.
This is what the team did.
Yeah.
They would check out attorneys out there.
They pay Did you file your 83B?
Oh yeah, they're good. They're good. Yeah, but that's a good lesson. I mean, it is. You know, in fact, you answered the question when with her 83B situation, she did have an attorney. It was an attorney, and he still managed to mess it up for them and create this scenario for them. So, lesson learned. Make sure you're working with the right people. You know, you do pay for what you get in this world. And when it comes to lawyers and attorneys and CPAs, guys, don't skim. I mean, like, when it comes to your business, it's like the one person you don't want to mess with is the IRS. Well, the one person you want to make sure has your back is the CPA, the attorney, etc. And that's really important.
I think my biggest learning lesson on that whole thing too is like, I just very much was like, okay, you're going to handle it, awesome. And so I didn't put that responsibility on myself to make sure that the really big thing was filed. I was just like, okay, great, you handled the whole thing, awesome.
Yeah. And
so I should have like made myself a list and made sure I was done. So.
You know, it's crazy. You have to be the expert at everything. And it's hard, guys. You really do. You have to be the expert at product development, payroll, attorneys, and everything else in between. And it's hard. You get intimidated by the subject, right, at hand, and you're like, no, they know what they're doing. Always give yourself a knowledge base to start with, right? You might not have caught it, honestly, because we're talking about something very specific, but give yourself that knowledge base when it comes, because at the end of the day, you are the master of your own ship. I mean, you know, it's the truth. There's someone steering the ship, there's someone pulling the sail and whatever. You're the guy walking around telling everybody else what to do. And you're the one that has to make sure everyone else is doing it correctly. If you don't know sometimes what they're doing or how they go about doing it. And I know it's a crazy analogy, but it is true. You're the masters. Right? Everyone else looks to you. So when you go to someone and you're not sure what they're actually doing for your business, that's where you need to say to yourself, okay, let me educate myself a little bit more so I at least understand what we're trying to accomplish. Right? Well, there's lessons all day in what we do, as long as we're willing to learn. Anything else? So we're going to repeat this class. I would really value the feedback. If you would like me to spend more time focusing on it, I have videos and show them. I'd like to do it with really beginner class. I didn't think you guys needed it, but give me feedback, guys, in regards to what I do, more presentation. I'm more of a talker than a shower. If you think that it's more beneficial for more slides, things like that, I don't like sitting here clicking and reading things per se, but I do like talking through things and explaining things. It makes it more relatable to people, but the feedback is great. So that if my next class, I can improve on that. And the things you'd like to see when it comes to these kind of reporting and tax reporting and subjects I didn't touch on, maybe payroll and other areas, let me know. So I can add it back in. I will get you all an email out with all the links and everything that we talked about today as well.
Awesome.
So,
thank you.
You're very, very welcome, guys. Thanks for attending on a rainy day at that. Any other questions, comments, concerns out there?
I don't see any chat, so thank you everyone for attending. A reminder, we will send a link to the recording as well as everything Damon mentioned and a follow-up email today along with the survey where you can provide Damon feedback so that he can keep making these workshops great. So thank you so much.